Is it a recovery or just more fog? Well, the headline shouted about that 52.1 composite output index, a 2 month high and accelerating growth. But if you've been following the Proponomics playbook, you know we look at the signals, not the noise. We had the good, the bad, and the budget. There is a bit of post-budget relief here. We've seen new orders growing at their fastest rate in 14 months, specifically in the services sector. It does seem some of that paralysing uncertainty has cleared, and firms have seen a bit of a tentative turnaround in client confidence. But you're always going to get a bit of a snapback in the rubber band, because if all these decisions got delayed in October and November, as we're led to believe they did, as I certainly heard and saw and observed in my own businesses, then they will have to be made at some point, and after the budget is the time they'll be made. Does that mean it's a good thing, or does it just introduce extra noise into the metrics that we normally trust to tell us what's going on in the real-time economy? Well, here's the rub. Employment is a bloodbath. We've seen 15 straight months of job cuts, according to the PMI surveys. If businesses were truly bullish, they wouldn't be carrying on slashing headcounts at a solid pace. And then there's a margin squeeze. Input costs just hit their highest level since May, driven by wage inflation and fuel. Companies desperately trying to pass this on, with prices charged rebounding from their November lows. So what's the investors' verdict? Well, Chris Williamson, who's the chief business economist at S&P Global, calls the growth lackluster and dependent on tech and finance while everyone else struggles. For us in property, the key was the MPC meeting, of course. The PMI suggested the rate cut was still on the table for December, simply because growth was so sluggish, but with inflation pressures rebounding. It mentions it's not expecting a smooth ride in 2026. So do bear in mind, although the report was released after the Bank of England rate cut, they obviously put it together a couple of days before the Bank of England meeting. So I think we can let them off for that one. Not ideal timing, of course, but then it's December. Keep your eyes on the data, not the headlines. We're in a low growth, high cost environment where only the efficient are going to survive.